Yo, this week was one of my craziest weeks ever in my trading career, and I will break down my trades, obviously with proof, because most of the fake gurus don't ever post or show trade executions, but I will. So first of all, most of the trades I take I post on my IG, so if you still do not believe what you see in this video, make sure to check out my safe stories. Let's begin. This is the USDCAD trade. Here's the execution, which was also posted on my IG before and after, obviously. And yeah, so it was a 10-hour trade. And why I took this trade now. Okay, so we can see that we had a consolidation, which meant that we had fair value. What does that mean? So the majority of buyers and sellers currently in this market agreed to buy and sell right here. It's basically a doji candle. A lot of people say that the doji is indecision, but actually it is not. It's the opposite. Why? The answer is pretty easy. If you think about the candle anatomy, the doji is basically a consolidation, and it tells us that the bid matched the ask in this specific price region. So when we see the doji, it tells us that the price is balanced, not indecisive. So this was a demand area on the higher time frame, and this is a lower time frame demand area. I could have gotten a better entry, but I don't really like going very lower time frame, so it was a limit order on M15. So for the past week we had the consolidation, which was the fair value, and when we finally dropped below, the competition to buy on demand forced the price to go higher, and the fair value area acted like a magnet for the price, and that's why the price struggled to go higher for over a week. And when we got the right price, we skyrocketed and traveled almost twice as more than we did in the past 8 days in a span of a few hours. If you're tired of strategy hopping and you finally want a strategy that will help you become profitable, make sure to visit the first link in the description. I'm currently in the make of a second course for the members, which will contain all the advanced stuff that I've never shared before. Let's carry on with the breakdowns. Okay, another trade was on NASDAQ, and it was a 4.5 hour trade. And why I took this trade? So it was higher time frame key level and a higher time frame supply level right here, and also another 4 hour right here. So this is basically an order flow mitigation. And also we had an order flow mitigation in the lower time frame with a liquidity grab right here. So here was buy stops. We mitigated and then straight down. Right before the New York Stock Exchange open, we had this trap zone which worked obviously, but it was only an illusion, an inducement. Then when the New York Stock Exchange opened, we took out the stops right here and then proceeded to go downwards, and higher time frame was downwards, so it was just a continuation. And I entered off this exceeded level, and yeah, it went straight to my TP, which was also a higher time frame demand zone. And yeah, very clean trade. Also, this zone, this whole zone was a fair value zone. You can see that we consolidated here. So when we had the deviation out of this range, and we tapped into a higher time frame order block, which was a supply, not a normal order block, drop base, drop supply zone. So when we deviated from the zone, from this fair value zone. It acted like a magnet. We mitigated, skyrocketed into our TP, which was a demand zone. And you can already see that we are reacting from it. I don't think this will be a big reaction because we're in a higher time frame selling bear market. So I will look for more sells in the near future. Another trade from this week, which I haven't yet closed entirely, but I took solid profits and let it run. So for now it's 10 RR, and here's the execution. Very clean, and it was very explosive because it was a weekly level. As you can see, we took this weekly level, weekly stops right here. And yeah, even without much technical analysis, if you look at the price, here we had a big trend, big impulses. Then we can see some struggle right here, which was the fair value. Then we deviated here. We took the higher time frame stops, and you can see with clear eye, without even technical analysis, that we started going down. And I'm not quite sure. Okay, I entered from this supply zone, which I didn't have marked, and I'm pretty sure. Yes, on the lower time frame I saw the Orderflow mitigation. Okay, right here, and I just straight up entered without really thinking about it. Also, I was shorting GBP JPY, so overall I was bearish for the pound on my other account. That's why I had a lot of confluences for this trade, and that's why it was so explosive, because of the higher time frame. And yeah, why I decided to close 90% of my position right here, I will show you why. So on the daily, this is a daily rally, base rally, demand zone. And as you can see, from last year we have been in a bull market for this pair. That's why I'm not convinced that this will continue yet, but I might look for more shorts in the future. We will see. And I also closed GJ trade, GJ swing trade. The first position I took on Tuesday, and it gave us 12R, and the second trade gave us 5R. Here are the executions, which were also posted on my IG. Why I took them. Okay, so here you can see clear fair value because the price just stood there. Then when we deviated, tapped into this POI, I was looking at some reactions and order for mitigation on lower time frame, and as you can see I got them. Clear order for mitigation, I entered, and I was targeting this weekly key level, daily key level. I call this sweet spot. I teach this in my community, and yeah, the second trade was also, as you can see, supply area, and here we had stops, we had liquidity right here, so we took the stops. Then lower time frame order flow mitigation, and I entered right here. And yeah, so 5R, 12R, huge trades, And also another thing I was looking at is the JPY-X index. So the first trade was here when we exceeded some sort of demand, supply. Then another one, same situation right here, trend line right here. Trend line is just something I also look at, but I don't take trades of it. It's just like an additional confluence, and also I look at it as liquidity in some cases. Depends on the narrative. But the JPY-X index was super clean, super clean, and I was confident in taking the longs. Also, I'm pretty sure we tapped into a daily supply level, but I'm still bullish for the JPY index, and yeah, I might be looking at longs in the future. I mean shorts for DJ. Okay, so on eurusd I've just closed my NFP trade. It's Friday, and I hit 10R with this one. Here's the proof execution and why I took this trade. So as you can see, I took few shorts during the week, and most of them were break even. This one were break even. I took some partials, but I won't count it because I didn't hit my full TP. Only this one and this one. But it appeared that I was on the wrong side of the market. If we look at the dollar index, we were in a big fair value area. Then first of all, we deviated into this demand zone. So here was my short on eurusd, the one that hit TP. We came back into the fair value, and then we deviated again on the news. So yeah, why I took this trade again, we exceeded this supply zone, so supply became demand right here, and another one right here. Then a reaction on M5 from a M5 fresh demand zone, you can see, and after that I entered right before news. Pretty easy. I hit 50R this week, so it's a huge week for me. I have to make sure to celebrate it properly this weekend. If you're interested in learning from me, make sure to visit the first link in the description. We're having discounts right now, so if you're interested, make sure to take advantage of these discounts. If you like this type of content and you want more breakdowns, make sure to write a comment down below. And yeah, see you in the next one. Happy trading.